All right, what's going on, everybody? Welcome back to another J Athens video, or you may call me Kevin. I'm the head trader and the founder at J Athens Institute. First things first, if you would like to get in contact with me, you can email me at jathensinc@gmail.com, or I'll leave the email in the description below. All right, so in this video, I want to talk about something different that's going to help the mindset of the trader, or to help change the perspective of the trader. This is not a fundamental, this is not a technical video. As you see what the video's title says, us versus them. So I want to go over this video to put you guys in the right mindset to understand what you're going into. All right, so as we move forward in this video, I'm gonna refer to the Forex market as the casino, because in my opinion, I believe that the structure in itself is set up in similar ways. Not to say it is that exactly, but I think the structure is set up the same way. All right, so us versus them. What do I mean when we say that? Just like when you walk into a casino, what is it? You versus the casino. Same thing when you walk into the markets. You versus the banks. The broker is just the middleman to facilitate the trades for you between you and the banks as far as transactions. So there's a couple things that I want to talk on that I think will help you gain more confidence, more clarity as you move into the markets. Because to beat the beast, you have to know the beast. You have to know your enemy. Study your enemy to beat the enemy. So here's a couple things that I can tell you guys. All right, number one, and like I said, I'm going to refer the Forex market to the casino to give you a better understanding of where I'm coming from. All right, number one, you wouldn't walk into a casino with money that you are not willing to lose. If you go in there with scared money, most 9 times out of 10, you're going to lose your money. If you go in there with a set amount of money saying, this is what I plan on using if I lose, or basically if we say in the Forex terms, if I get stopped out, then so be it. All right, so two, I think that going into the casino or the market within itself, you shouldn't go into something that you don't have experience or knowledge on. Not to say you need to have experience to be a gambler. That's not what I'm saying, but you're not going to go into the casino playing blackjack if you've never played blackjack. So same thing when it refers to the Forex market. You need to have great understanding of what you are getting into. And there's a whole bunch of glitz and glamour and lights around the Forex market. Just like in the casino, you walk in, what do you hear? Ding, 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 ding. That's all you hear. Ding, 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 and sound and music going off all night. You can get distracted because there's no clocks. Same thing with the charts. You can be caught on the charts for 5-6 hours throughout the day. So it has that casino type feel, because what are we in this market to do? We're in this market to make money. So I think, when you're going into the market, just like the casino, it has a structure, right? The structure is the house. Now, the house is not going to design itself for the house to lose. So understand that. You as an individual walking into the casino, you're just one individual walking into a house that's designed for them to win. Do you understand that? So how can you approach that and still benefit from, that situation? Or how can you approach the Forex market and still walk away with profits? Here's a little bit of my rules that help me, profit into the Forex market. I know that you should be telling yourself this: nothing is 100%. Right? Nothing in life is 100% guaranteed. And what I mean by that is, if you're going into the Forex market, we all have the high expectation of wanting to win. That is how, we gain our confidence. We want to win, but how many of you want to lose? Nobody wants to lose. So get what I'm saying right now. Nobody wants to lose. But what I'm saying is, if you lose, how is that going to affect you? Knowing that you go into something that is not 100%, sometimes, guess what? You're going to have to lose money. So I tell myself that all the time. I go into this as a business. Sometimes I'm going to lose money. Sometimes I'm going to make money. But the whole point of the matter is, in my opinion, try to stay away from the intraday feel, because the intraday trading is basically you wake up in the morning, you check your charts, you get into a position, you get out before the end of the day. That's just like me waking up, getting that thought in my head and saying, well, let me walk into the casino. I have $200. I'll play blackjack, I'll play a couple slots, and I'll leave the same day. Now, every day can be different. You can walk in, you can make money, and then guess what? The next day, you can walk in and you can lose money. So, do you see where I'm going with that intraday feel? Statistics show that traders who do intraday trading, not to say they won't make money, right? But in the long run, you are eventually going to return all your profits back to where? The house. You get what I'm saying? Okay, let's jump off track. I remember when I was younger, I used to be in the casino big time. I mean, Hard Rock Casino, I was always there. And I remember one time, it was around 2 or 3 in the morning, I played a slot machine game, and I put in $5. And the thing is, when I put it in, I hit the button to play the game, and then it gave me a bonus, like choose one out of the 3 bonus. And when I hit one of the bonuses, I went from $5 to $7.50, and your natural instinct is saying, you know what, get out. But guess what? To go from 5 to 750, it gave me so much confidence that guess what I did? I stayed. And believe it or not, I went from $5 to $7.50 back to $0 by time I left that night. So this is the point I'm trying to make. I feel like the market is the same way. You continue to intraday trade. For the first 3 days, you might make money. But guess what? For the next 7 days, you'll just be trading to give what you made for those past 3 days back to the market. You understand what I'm saying? So my initial, I was supposed to put the $5 in, make the $7.50, walk out. But in this terms, this is, we're talking about the Forex market. Now, the way I suggest to approach the market is to understand that you're going into a house that's designed for you to lose. So when we look at charts, like for instance, there's a chart in front of you right now. When we look at charts, in essence, right, if price is moving up, hold on. If price is moving up, in essence, the way the banks think, remember, it's us versus them. The way that the banks would normally think is, if we see that price is moving up, then guess what? On the back end from the banks, well, let me do it this way. If we think that price is moving down, right? Let's say we're the individual or the retail traders. We think price is moving down, while on the back end, the banks have it turned to the upside. You get what I'm saying? So essentially what I'm saying is, this is a very transparent market. Now, there are a lot of different things that can be thrown at you when you're gaining knowledge to the market. But in essence, what is this about? Somebody loses, somebody wins. Just like the casino. Somebody is going to win, somebody is going to lose. So the reason, here's my opinion, the reason for that middleman broker You get what I'm saying? The broker is connected to the investment banks. You get what I'm saying? The investment banks are the one with the money. Now, if you're putting in your entry, stop loss, take profit within a broker system, guess what you have done? You have now given away your position. Now, the whole point of the market is to stay under the radar and move with the banks. You get what I'm saying? Because their whole purpose is, like I say, this is legal robbery. The whole purpose is to make money. You know, I recently put out a post on Instagram where I told people, listen, news, it's a form of tool to gauge what is going on, but news doesn't move the market. News in itself, you should use the news to build a case about what's going on within a certain economy, right? But what moves the market? Prices, because we're trading currency. Prices is the one that moves. So news is important in a sense that you should use it to build a case to say, okay, you know what? This data came out, this data came out, this data came out, and this economy does look healthy moving forward. But guess what? You could have good news, and guess what? The price still reverses to the downside. We actually had that example on Friday with NFP. Let's go take a look at it. Let's take a look at the DXY. All right, so if you see right here, we'll look at a 4-hour chart. So if you see right here, right before this initial drop, we had NFP released, and the numbers were pretty good for the dollar. Earlier that week, we had strong dollar news. Now, we clearly see right at the 98 level, that level completely got overlooked. Now, one would say, well, news was good, but the price fell the other way. Now, keep in mind, we'll go back to it. News is not the main thing. A lot of people will look at the news and try to trade the news initially, but that's not the main thing. The main thing is which way is majority of traders going, and the banks are going to take it the other way. It is literally us versus them. We have to stay under the radar to go contrary of the same group that we're in, if you understand what I'm saying. So if we put ourselves in a category of retail traders and we have institutions, you have to start to think outside of your peers now if you want to be successful, because guess what? I can almost guarantee, as this price was, let's say we were looking at a pair. Let's not look at the dollar index for what it is. Let's just say this was a currency pair versus another currency pair. Now, as prices was moving down, right, I can almost guarantee on the back end, retail traders were taking it long. So that's essentially what the banks are doing. They're seeing where majority of the money is flowing, and they're taking it the opposite way. You understand what I'm saying? It's very simple. Now, I wouldn't say, well, there isn't a little bit more to it. Yes, there's definitely a little bit more to it. And I'll say this now. I'll put this out there now. If you guys are willing to learn that little bit more, I recommend you guys join my course. I hold courses every month, and I basically teach the way of the market that is not being taught. So I strive on helping people understand the little bit of confusion that they may be going through within the markets. And one thing is perspective on the markets. Us versus them. That's all it is. Our money versus their money. But at the end of the day, you can have 30,000 retail traders, still won't have enough money as the house. Has enough money, as much money as the house itself. So understand that. You're coming into a situation that is designed for them to win at the very end of the day. Now, if you continuously walk into that casino every single day, chances are at the end of the quarter, you'll most likely be negative. Because you know why? You're constantly going to that place trying to rip it, trying to snatch or pinch from that market. But guess what? The person that goes in ever so often might get lucky. You know, to me, there's a trick going into the casino. Let's talk casino for a second. Try this out, guys. If you've never been to a casino, right? Go into the casino, and you know how usually casinos, they'll tell you, oh, sign up, you get free play. Now, that's the trap. Think of it like this. Think of it like this. Here's the trap. You go into the casino, you register for a new account. They may say, hey, here's $50 free play or $100 free play. And guess what? They give you a card to go on those machines. Now, guess what they did? They have registered that card for you to win. Because guess what? When you win, I'll let you guys answer. What happens when you win? You stay. That's the point of the game. So, for instance, let's look at Aussie dollar. Now, if you look at the backdrop of Aussie dollar, I believe that in a sense that Aussie dollar is weaker than the US dollar if we go off of interest rates. If we just say a quick gauge of interest rates, then we know more capital flow will go to the dollar. But if you look, let's look at a daily chart on here. Now I'm going to try to make this as quick as possible because I don't want to run on too long. Let's get that out the way. And hold on one second. Let's get that out the way. All right, so if you look right here, we're basically at a floor of 7,000. And what did this show right here? A big wick area right here. So if we see that on a 4-hour chart, NFP news that came out, we had reversal to the upside. See how we moved up, but the news was actually positive, but Australia pushed up to the upside. Now here's the sense of what I was talking about of you registering at the casino. So let's go back to that. You register at the casino, you get the $50 free play. Now you're basically like a marked target. They have something. Now this is my opinion. This is all my opinion. I believe they have something on that card that whatever machine you go to is going to put the machine in your favor. Because remember, the house has majority of the money. Guess what they can do? They can give a little for you to stay in the game. I believe they call it the blackjack theory. The house is going to give you a little to keep you in the game. So when we had, for instance, when we had that news came out on NFP on Friday, on our average mind would think, in a sense, we would think, well, the dollar is good. Australia, we had good dollar news. We would think Aussie dollar is going to push down. What happened? It pushed the other way. Now, will it reverse down? Maybe we'll see in the future it's possible that it can push down. But here's the thing that I'm explaining. Institutions or casinos, it's not like they don't lose money, because I've gone into a casino and made money and walked out, right? So if I walk into a casino and I put down $100 and I make $500, guess what? The casino is now $400 less richer, but they still have more money than me. So if I didn't have the willpower to say, I'll take this money and get out, that money was going to keep me in the game. So when we look at a position like this on Aussie dollar, we see dollar good news. If we understand the fundamental layers behind these two currencies, you would know that this is a give a little, keep them in the game situation. And that's where traders need to understand. You are going against banks, and they're going to give a little to keep you in the game. So what do I mean by give a little? They're going to purposely lose money because they know they'll get it all back later down the road. They're in no rush. we as retail traders are. We want to go in fast and pinch the markets and intraday trade and take what we can. And guess who's giving you all that? The house. So that's how we need to look at the Forex market. You might feel like, well, we're at these current levels at the low, and you see two areas of demand. You're like, oh, that's a buy. All right, yeah. Technical chart is showing you buy based on what you see. But how do you know by what you see, the banks see the same thing, and they can think of the mind of the retail traders and say, you know what? We have two areas where there's demand. If price ever goes back there, we know that they're going to buy, because that's what most, new traders are taught. They'll look at 2 or 3 areas and see demand, and they start to buy. So we come back in here and say Aussie dollar to the upside, but on Friday we had good dollar news. Now think of how easy that would have been if the dollar news came out good and Aussie dollar tanked. Everybody would press the sell button. But you're going to have some traders that think, well, there's 2 areas of support. This is a buy, and not even understand the fundamental drop behind it, right? So they're going to see that and say, okay, this is a buy. Guess who knows that? The house or the institutions. So guess what they'll do? They'll give a little to take it from you later, because you're thinking buy on Aussie dollar, and around the corner we may have interest rate cuts on Australia. We definitely have higher interest rates on the dollar, so we know more money flow will eventually flow to the US. So this could be a possible trap to get buyers. Remember what I said, they give a little to take it all the way back, to take it back from you in the end, or they give a little to keep you in the game. All right, so this is my video on a perspective standpoint. And like I said, guys, it's us versus them. We need to learn how to stay under the radar and get on the sides of the institutions, because if majority is selling, they're buying. If majority is buying, they're selling. Understanding fundamental backdrops behind it will put you in a better advantage of actually, knowing when to get into a certain position. All right, so I think this video has been on too long. I don't want to keep going too much talking. If you guys are, let me say this, if you guys are interested in furthering your knowledge, I highly recommend you come and take my course. I will, I basically lay it all out on the table for you guys of what's important and what we should be looking at when it comes to the markets. Now, it's a 2-week course, so I have one starting on May 6th, and we go 2 weeks from that point on. Once you complete the course, you would then join a private group where you'll basically get bank insights, central bank insights. You get a lot of inside information to help you keep you ahead of the curve. All right, so until next time, guys, it's us versus them. Get that understanding, man. I'll catch you guys later.